From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for February 17th, 2016. In just a moment, we'll be taking a look at the NZDUSD, the New Zealand dollar, versus the US dollar for today's trade analysis. But first, I want to recap a couple of the trade suggestions made over the past few days. Of course, Monday was a bank holiday here in the U.S. There was little trading for us on Monday, but yesterday I had a couple of opportunities, and you see the trades going at the bottom of the chart. Probably the most profitable one so far has been this GBPUSD, the Great British Pound versus the U.S. dollar that you see here going, sitting about 32 pips of profit or so. Seeing a little bit more earlier today, up around the 40 pip mark, but a decent opportunity so far. We saw the breakout yesterday. We saw this black box where the market had been bouncing around in for a few days, pushed underneath it, settled out underneath it, several candles open and closing underneath there, even testing all the way down to the green zone into the 42.50 level. A rise finally coming right back up underneath the blue zone. That's the retest that we were looking for, and a selling opportunity up there close to the 1.4335 level is the level that we got in at, just underneath that blue shaded area. The stop loss, of course, was initially up here closer to the top of the blue shaded area, but currently the stop loss has been moved to break even. With the fall over 30 pips of profit, we've seen the stop loss go to break even using the trade manager. Of course, our target, selling the blue zone, as we discussed in yesterday's live trade room, selling the blue zone, we target back down here to the green zone. That's the first target, and I typically say that becomes your first decision zone to close, protect, and potentially close the trade as it tests down into support targets. The green shaded area, that's 42.50. However, we do know that if it continues to break lower, pushes through that green zone, the next target that we could shoot for is the pink zone. So the deeper it goes, the better our reward, the better the profit, and the lower the risk to reward ratio, or the better the risk to reward ratio becomes for the trade. So while we did have initial risk, we're now in no risk because we've moved the stop loss to break even, targeting the green shaded area, and then potentially all the way back down to the pink shaded area over time for the pound dollar. Moving on to the AUD-USD, Australian versus the US dollar. Yesterday talked about selling into the long-term trend line and the resistance zone on the Australian dollar. I've done that, but hasn't really panned out as I was hoping for quite yet. I've been in and out of this one actually a couple of times now as it hit the blue zone, dipped, came back up, hit the blue zone again. We go down to the 4-hour time frame, and here it is right here. We can see the market getting underneath the blue zone, coming back up underneath it here on this candle, went down to the green zone, came back up, and I've gotten into it a second time here into the blue shaded area. Of course, just like the GBPUSD, we expect resistance here. We're going to target the green shaded area. If not beyond that, we could look for it to go down to the pink zone. The risk, of course, is that it breaks above the blue zone, which hopefully it will not. And then if it does, we know that the orange zone becomes resistance. And again, above the orange zone, we look for it to go higher. So right now, our main focus for the Australian dollar is that it stays underneath this blue shaded area, targets back down to the green zone into the 7,085 level once again for the Australian dollar. In a similar fashion, we have the NZDUSD, the New Zealand dollar versus the US dollar for today's trade analysis. Let's zoom out to the weekly time frame first. You can see the long-term trend line. We've been studying that in the trade room a lot recently. Definitely something we need to take note of. Zooming in a couple of times here, just staying on the weekly time frame, but zooming it in, you can see what's happened over the past several weeks. We see the black box up here. The market came up 1, 2, 3 weeks, holding inside the black box along the weekly trend line, and eventually reversing and going down. Well, guess what? Here in the blue box, 1, 2, and now we're on our third week. Now, wouldn't it be nice if this happens again? But we don't know if it will or not. But definitely want to take advantage of it as it settles out underneath the weekly trend line into resistance. Last week's candle, very interesting. That large wick on top, small candle body. It could be an indication of potential reversal here for this currency pair. Let's go ahead and take it on down to the daily time frame. And we've been studying that blue box in the live daily trade room. The fact is, resistance at the top into the pink zone, congestion and resistance into the orange shaded area. We're now underneath the yellow shaded area. That was the bottom and support within that blue box in our support there. You see the 100 period moving average coming into play as well. We saw the market 1, 2, 3, 4, 5, 6 days sit on top of that 100 period moving average. We're underneath that now. So the yellow zone today becomes your selling opportunity. Sitting within or under that yellow zone, we look for the targets back down to the green zone. Of course, beyond that, if it breaks through the green zone, then we would look for it to continue to go down and target the blue zone. And of course, beyond that, we could even see it all the way back down here to this purple shaded area down here at the very bottom of the chart. I don't have it dragged over all the way. We could just bring it over here like this, but that becomes our next target on the way down. So the main focus is staying within and underneath the yellow shaded area. Now, for those of you that have been in the live trade room, you note here that it hasn't opened and closed, by the way, on the daily time frame under the yellow zone. That will be important as we go through the day today. The real clue here is that we want it to stay under the yellow zone, the moving average, some Fibonacci in there. We don't want it to break above, and we want it to target support levels lower, green, blue, and purple. So that's the main focus for the day today. But again, we haven't had the open and close here. Take it down to the 4-hour time frame. There it is right there. On the 4-hour time frame, clearly see the breakout, the retest, and this is a classic break pattern where it breaks and retests into resistance. That becomes your selling opportunity. You can see the sell that I have is at 65.95. So if you're looking for an opportunity, 65.95, 6,600, that yellow shaded area, as long as it stays underneath it, that's our focus, targeting the green zone or blue zone or even the purple zone on the way back down. The risk, 45 or so pips would put it just in the middle of our shaded areas there. If we're in at 65.95, if you look at a 45 pip stop loss, you're right in the middle of the orange and the yellow shaded area. The main focus is that we just don't want it to break above the yellow zone. So 45 pip stop loss, I think initially is an appropriate stop loss, but we'll bring the trade manager in to manage the trade for us, and we'll look for opportunities to take profit as it heads down to the next support levels for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.